Hi guys, and welcome back to another ITH podcast where today we're going to be chatting all things car finance. Tim and I are joined by Mr. Darren Gibson. Now, if you don't know Darren already via his Instagram fame, he looks after most of the financing of a lot of the YouTubers' cars. So the fact that we had TGE in the last podcast chatting quite openly about how he finances his cars, how much it was costing him per month, we thought we'd go to the man that sorts the deals, Darren Gibson. Darren, thank you for coming and chatting to us about all things we can't afford.
Yeah, thanks for having me.
So the first thing is, I suppose, car finance is a way of buying a car that you can't really afford, right?
Technically, that's correct, yes.
Okay.
Clearly, the best way to buy a car is to buy it with cash, if you can afford to do that. But clearly, a lot of my clients, whilst they can afford to buy the cars in cash, they choose not to, and they choose to use vehicle finance on the car.
Okay, so Tim, with your cars that you've got, do you finance any of them?
No.
So
I do contract hire on my. Well, no, actually, no. A smart car we bought because that was only a few grand.
Okay.
But yeah, our family car, the VRS, we just it's a contract hire.
So that's a contract hire, which is a kind of form of finance, which we can maybe come on to a little bit later.
Yep.
Okay, which you've already spat on Tim's shiny forehead about him hiring a car, which is obviously not the way that you want it to go. And I suppose in a way, not that I want it to go, mainly because I've already done a bit of a deal with you. I've got a Volkswagen Golf GTE, which I absolutely love. I bought it through my own little business. And I got what I thought was a great deal through Volkswagen Finance. So I went to Volkswagen, I said, this is the car that I'd like to buy. And they said, okay, great. Well, if you give us £4,000, this is how much it's going to cost you per month. And at the end of it, this is how much basically you owe, or you can buy the car, or a few options that I didn't really understand. And I came to you because we met on a Monaco trip.
That's right.
And we spoke a lot about car finance, and a lot of people that we know have financed cars through you. And I was a little bit intrigued as to maybe if I could get a bit of a saving, a bit of a deal. And we worked out the numbers, and what Volkswagen were giving me was fine. What you gave me was basically a £2,000 saving over the, I think it was 3 years that I was going to own the car.
Yes.
And a better residual value on the car. So basically the car would be worth more at the end of my period of finance than it was going to be worth if I just gave it back to Volkswagen. Mm-hmm. So with that in mind, what different options do people have when they come to buying a car that they might not want to buy, like Tim has very well done with his smart car, in cash? What options do you have?
So effectively, there are three main forms of finance that I introduce and broke for. The classic being hire purchase, that a lot of people know of and have heard of. Hire purchase is where you simply fund the balance of a vehicle over a period. It can be 2 to 5 years in length. And at the end of that period, the individual owns the vehicle outright and requires no further payments.
Okay, so we'll start on that one first in a second. What were the other two?
So the other two then are effectively lease purchase with balloon, or hire purchase with balloon as it's also known. And the third form then is personal contract purchase, which is known as PCP in the trade.
Right, okay. That means literally kind of nothing to you. Maybe you're watching this going, I know all about it and I'm an expert. But for me, I was still quite, I suppose, in the dark about financing. Tim, I don't know about you. Do you know a lot about financing?
I've done what most people do. You read what you read on What Car and Autocar and all those kind of things, and they give you a very hazy, brief little thing about what the various options are. For me, I went not going with that. I went with the personal contract hire, leasing side of things, because there was nothing down at the beginning. At the time, we just bought a house, and it was like we just needed nothing in, and it was a dirt cheap, stonking lease deal that popped up for like 160 quid a month for a Skoda.
Okay, so let's cover your deal that you've got on your Skoda first. So that's a leased deal. So it's basically you're hiring the car.
It's effectively a long-term hire is the way you could look at it, I suppose.
Right.
I mean, just so you know, I got mine on a 1 plus 23, so there's no lump up front. Normally there's 3 plus 23 or 6 plus 23, which means you get 6 payments
right.
up front.
So the first number, the 1 plus 23, is basically over 23 months you have the agreement, and the 1 is the how much you have to pay up front, which is just the first month. So that's normal,
exactly.
Right?
Yeah. I mean, I know about leasing because that's what I do. Financing, not a clue.
Okay.
But yeah, so I got like a 1 plus 23, so 2-year deal, and it was ridiculous. On my Octavia VRS, it was 185 quid a month. I mean, it was peanuts.
And so
on
at
a
the
1
end
plus 23,
of,
so it was.
At the end of that finance, well, not finance, but at the end of that lease agreement, you just have to give the car back.
Yep. Actually, yeah, with VWFS, Volkswagen Financial Services, they did offer me the chance to buy the last car. They haven't done it with this current one.
Okay.
But it's, yeah.
General consensus is you have to, if you're doing what you've done, which is a hire purchase agreement, you hire the car like you would a rental car, and then you give it back at the end of.
Exactly, yeah. I mean, for me, I just worked out the numbers, and going off my knowledge of the car game, that's going to cost me X amount over 2 years.
Yeah.
And in all 3 leases I've done, it was quite a bit less than the depreciation on the car.
So with that in mind, being the devil's advocate, your car, let's just say it went up massively in value, you can't gain out of that because you don't own the car.
No, I've got 0 equity in the car at all. For me, it's just new car, off it goes, done.
Yeah, so if you wanted to modify the car, change it, put different wheels on it, you couldn't because it's technically not your car.
You're not the registered owner, I think you're the registered keeper.
Right, okay.
No, I mean, I wouldn't modify a leased car at all.
People that are listening / watching might want to buy a car that, like, say, Archie or Tom or whatever, they might want to modify it slightly. In agreement with your lease hire, you wouldn't be able to do that. It's basically, we're letting you borrow the car in a way to drive it, pay us a monthly fee, and
exactly. I mean, I even
at the
had
end
to,
of the agreement, that's it.
I didn't have to, but I wrote to them and told them I was putting winter tyres on. It's like it's one of those sort of things where, I mean, you have to just make sure everything's above board.
Yeah, sure. Yeah. It's ticked off and everything.
Yeah, exactly.
Okay, so with that in mind, if you then do want to technically own your car and be able to do what you like with it, etc., we got the 3 forms. Let's start with the first one that you mentioned.
Yes, again, so hire purchase being the more classic form of finance that people would be used to, i.e. you put a deposit in for the vehicle, normally 10% of the upfront value of the vehicle, and then you ultimately pay for the balance of the capital outstanding in the car over a 2 to 5 year period. Generally, the sweet spot is 36 to 48 months, depending on the client and the car.
Okay.
And at the end of that period, as I said, the client doesn't owe any more money on the vehicle, and they're free to do what they wish with the vehicle.
So I love going with examples, which we've done obviously with my Golf and stuff, but say you want to buy a £100,000 Ferrari. Obviously it's not a new Ferrari. 100 grand Ferrari, second-hand Ferrari. You found your dream car and you're like, there's no way I'm ever going to be able to afford that. But you say, what, 10%?
Yes, so generally a lot of the finance deals that I broker and introduce for my clients tend to generally be lease purchase with balloon. So if the vehicle is £100,000 purchase price, a lot of the time the client will say, okay, I'll put a minimum of 10% into the vehicle. They can put less at times, but it just depends. But 10% is usually the norm.
Okay, so you put 10 grand down.
£10,000 down on the vehicle, and then they fund the balance of £90,000 over normally 36 to 48 months.
Okay.
We then apply what's called the balloon to the vehicles, or the residual value. Now, depending on the specific financial deal that they enter into and the legal agreement behind that, they then either have a guaranteed future value on the vehicle, or they have non-guaranteed future value on the vehicle, depending on the specific financial product they sign up to. Again, generally, if it is not a deal whereby they have a guaranteed future minimum value, they tend to get a better balloon on the car. Having a better balloon on the car allows them to effectively leverage more of the equity value in the vehicle, and then effectively have lower monthly payments to make the car that little bit more affordable.
And that's because they haven't guaranteed the value of that vehicle over the 2 years.
Correct, yes.
So if you guarantee the value of the vehicle, say I buy my £100,000 Ferrari, and the finance company, are the finance company the people that work out what that car should be worth in 2 years' time?
Yes, so there's a system that the industry uses called CAP, and effectively it shows the depreciation curve of a vehicle over 2, 3, 4
Could it be
period.
an appreciation curve?
On certain vehicles it can be, yes. Generally on the vehicles that tend to appreciate in value, then effectively we can leverage more of the final balloon payment to the extent where it could even be on an interest only basis.
Right.
So the client isn't paying down capital on the car over the term, but they're just covering the interest in that aspect.
Okay, and the balloon payment then, for anyone that doesn't really know what that is basically a payment at the end of the financial agreement where you can pay and then you own the car?
Yes, that's correct. So if it's over a 48 month deal, let's say, and the client holds the car to term, then effectively included in the final payment is the upfront agreed residual amount for the vehicle. Again, if they've gone with the deal where it's not a guaranteed value on the car at the end, it's up to the client to sell the vehicle or part exchange the vehicle on their next purchase and ensure that they meet that minimum balloon payment.
So I was going to say, so when you've done your few years, you've paid your monthly payments, and off the top of your head, on, so let's say £100,000 Ferrari, and you've given your £10,000 deposit, what kind of price would you look at per month? I know it varies massively on cars, as you say. You know, if you buy a car that is just going to plummet in value, then obviously your monthly payments are probably going to be a bit more.
Yes. Again, so if the client was potentially borrowing, let's say, 80, okay, I did a deal this morning. The car was £91,000.
Okay.
The client's putting in 10,000, therefore borrowing 81 over the term. We looked.
How long was the term?
We looked at that for 48 months,
right.
And the client's monthly amount on that basis, with a residual of £50,000 at the end of the term.
And when you say residual, what, £50,000 at the end of this? So that's what the car would be worth at the end?
So the final balloon payment that the client would be required to make on the facility would be £50,000.
Oh, I see. Right, okay.
To exit the deal or own the vehicle at that point.
Right.
And the client's monthly on that was coming out just under £1,000 per month.
Okay, so that's not bad. So I mean, so effectively they're leveraging 30 grand. You know, over those 4 years, because they've already put the 10 in, and so they're effectively borrowing 30 grand.
Yes,
so
but
over 4 years for less than a grand. I mean, it's good.
Yes, you do pay interest on the entire upfront value of the vehicle. So the upfront purchase price of 91, even with the balloon included of 50, you are paying interest on the total amount.
Okay.
But yeah, at the end of the period, you would owe 50 grand on the car.
So then at the end of the deal, at the end of the finance agreement, you basically say, right, I'm either going to part X the car, I'm either going to sell it, or I'm going to buy it.
Yes.
Those are the three options you have.
Yes.
And with that first one, which is a hire purchase we're talking about, you have all three options and you can do all three.
Yes.
Okay, so you want to sell the car, let's go to, Redline Car Specialist, hi Dean, and you sell the car to Dean for, well, say it's a £100,000 car, you sell it to him for 80 grand, and what happens then? You basically, look at the finance agreement, see what is owed on that agreement, and then that balance is taken off? Or?
Yes, so when the client is looking to exit the facility, they get in touch with myself or again direct with the lender that they borrowed the money from. They request what's called the settlement letters for the vehicle, and at that point, if the full term has not elapsed, so they haven't held the car to, say, month 48, if it's a 48 month.
So when you sign your agreement, let's just say it is for 3 years.
Yes.
If you're a year in, you go, guys, I just want to sell this car, I don't like it.
Yes.
That's what you're saying, if
yes,
you don't hold it for the whole time.
Exactly that, yes. You can approach the lender, request a settlement letter. They calculate it based on the amount of capital you've repaid and any other fees or charges which are associated to exit the facility at the time. And you receive a letter stating the exact amount of money owed on the vehicle, so you can repay that and then be free to enter into your next
Sounds a little bit like scary saying, right, I've done this for 2 years, I've got a deal for 2 years, but actually after 12 months I want out. Is that going to cost you a fortune to get out, or?
It depends. Every financial agreement in the world of car finance, several do have exit clauses and charges and fees or penalties associated. They vary from lender to lender. Okay. Certain lenders I work with operate a fee of roughly 3% of the outstanding capital balance to maturity as an exit fee. Others operate a 4321 system, so if it's a 40th month facility, they charge 4% in year 1, 3% in year 2, 2% in year 3, and 1 in year 4. So clearly, the longer the client has held the car through the term, the less of a fee they end up paying. Again, with a personal contract purchase or PCP, again, they have a different set of exit criteria associated to that. Generally, that can be just 1 month's payment. So if the client's paying £623 a month, they need to make a payment of £623 to exit the facility.
Right.
But they can exit it providing they've held the car through a certain period of the facility.
So if anyone's looking at a higher purchase agreement, it would be worth just coming to you, and you can do all the different deals.
Yes.
You can look at all of the different options, and say, for instance, many times before in the past, and trust me, I've done this, I've texted Darren and said, right, I want to buy this £120,000 Ferrari. I really want it. How much is it going to cost me? And you've gone, well, there's lots of different avenues. This, and this. If you don't think you're going to own it for the full 3 years, do not pick this option because it will cost you X to exit, etc., etc.
Yeah.
Yes.
So it's well worth coming to you if you do have an idea and just chatting through the
Absolutely, yes, and always willing to chat to people and look at all the options. Again, I try to ensure that the structure of a deal is correct for the client, not correct for myself or correct for the lender, but really what suits the client best.
Okay.
And we have an obligation to do that. Again, when I have an introductory call with a client and they say, look, I want my monthlies as low as possible, and I want a 4-year term, and my next question is, how long do you generally own your vehicles for? And they say, well, 18 months. So I immediately tell them clearly, you're more suited to a 24-month period, and we can structure it via this, and this. And it, again, depending on their own credit profile and their own financial circumstances, we can then structure it best to suit them. And also, of course, it then needs to be credit accepted by the lender, and they have very strict requirements in place to ensure affordability for the client on the vehicle.
Somehow I was accepted, so I don't know how, but good old Volkswagen Golf keeping its good old value.
Oh yes. Now there's something. This is something actually that I wanted to bring up, which is generally a lot of people see if you go to sites and there's all these different options, and you do see people talk about finance and lease in the same sort of terms, and they say, oh, it's just you're just borrowing money for the car. I mean, they are very, very different. You know, you're talking about the exits from the PCP and from your contracts and hire purchase and things. When you are in a contract hire lease, like I am, I mean, it's a 2-year lease, and you're in there for 2 years. If you have to get out of there early, it is not cheap.
So that's a downside of having the lease.
Yes, I mean, you're committed. Like I'm committed for 2 years. If after a year I wanted to get out of it, I mean, this is a Volkswagen Financial Services lease. If I wanted to get out of that after 13, 14 months, to get out of it, I have to pay 50% of the remaining fees, of the remaining sort of monthly payments, which is, I mean, it's a big amount. It's not a huge amount because look, I've got a cheap lease. But there are people who lease Range Rovers and whatnot. They're paying £1,000 a month on a lease. If they get to the point where they realise, oh, I can't afford this, they're still stuffed. They're really going to do it. But there's another flip side, I think, to a lease, which is, again, if you're talking about this mythical, let's go with a 90 grand 911, say. If you do, I mean, you can correct me if I'm wrong on this, from what I'm led to believe, if you do a contract hire, like a lease, traditional lease, you're on your credit profile. So if for instance, if they think in a year's time, after I get this car, in a year's time, I'm probably going to try and get a mortgage with my girlfriend or whatever, the contract hire lease only takes onto your credit profile the amount that is basically the term of the lease. So you'll be paying 17, 20 grand over those 2 years. It only takes that 20 grand on your credit profile. That's all that gets held against you. Whereas with a contract hire, it's the full amount of the car. That's what I'm led to believe. I don't know if that's right or not.
Right. So
that's just
it's
something to keep in mind.
So with your lease deal, you're better off if you were then wanting to put a deposit down on a house.
Yeah, because I've only got like 7 grand against our credit profile.
I suppose that makes sense because you don't technically own the car. So
exactly. They're just saying you're only going to be paying 8 grand or 7 grand or whatever it is over these 2 years. So that's all we're going to hold against you. Whereas it's a different thing. If I got a hire purchase on the same car, it would be 27, 28 grand on that VRS.
But I mean, there's pros and cons, and as we were saying, it is completely, personal opinion and personal circumstance as to what you are best to go for. So if we move on to the second one, so the first one we did was, what was that, hire purchase?
So we looked at hire purchase.
So hire purchase is basically deposit, monthly payments. You can either buy the car, sell it, part exchange it at the end, clear your finance, and off you go.
And then the other form of hire purchase, technically called lease purchase with balloon. So effectively you are leveraging the final balloon payment in the car.
Is this the second one? We're on to the second one, or is this an offset of the first one?
It's technically a subsection of the first one, yes. So,
but it is number 2
in
the 3.
So lease purchase with balloon. Yes.
Lease purchase with balloon, that's what we're talking about now. Okay, fine. So lease purchase with balloon, sorry Darren, you were saying?
Yes, so again, lease purchase with balloon allows the customer to put the initial 10% or more. You can put as much really as you want in. in the vehicle at the outset. Clearly, the less you borrow up front, the less you pay in interest, fees and charges over the period you borrow the money for. So, but with the lease purchase, you can end up reducing your monthly payments effectively because you are leveraging that final payment aspect or the equity value in the vehicle over the term of the facility.
Okay, I don't know about you, Tim. I got lost a bit there at the end. So again, let's give it another example. 100 grand car.
Yes.
You put £10,000 down.
Correct.
Then what happens?
So you're borrowing £90,000.
Yep.
Depending on the vehicle, the spec of the vehicle, the mark and variety of derivative of the car, then the lenders will assess that on a credit assessment basis, and they'll say, okay, on this vehicle, we are happy to extend a balloon of, let's say, 45 or 50% of the total upfront purchase price of the car. So they'll allow you to put a £50,000 balloon on the end payment of the car, and then effectively reduce your payments. If it was on a HP basis, you might be paying in those sorts of terms. You could be paying 1,300 or 1,400 per month.
I see. Right.
Whereas
so you
with the lease purchase, you'd be paying maybe half that.
Right, so you basically, what you do is you extend the price at the end that you'd buy the car for to be able to make sure that your monthly payments come down.
Yes, exactly.
Okay, so on the first one we spoke about, the balloon payment is set by you guys, as in you say, this is how much it's going to cost if you want to get out the deal at the end, as in buy the car. But on the second one, you can say, well, actually, I'm probably not going to buy the car at the end of it, so I'd rather the balloon payment was more, so my monthly payments were less.
Yes, exactly that. And depending on the buyer's ownership objectives for the vehicle, certain people like to overpay more of the capital each month on the vehicle, so they're not just covering interest, they're covering interest and capital.
Yeah.
And even if they could have a balloon on the vehicle of say 50% after 48 months, they may wish to reduce that down to say 30 or 35%, pay more into the car per month, so they have a higher monthly payment, but when they come to exit the vehicle, they will owe less as a final payment.
Okay, that makes sense.
And and with those ones, that's when they might have equity at the end of the contract. So they've put in X amount at the beginning, and they come out at the end, and they've got more money, so they can. I mean, this is sort of the finance stepping stones, isn't it? It means it enables people they can pay on this car, they get themselves a Golf, and then 2 years later they sell that one and they end up in an M3, and then and then they're in an 911.
Yes.
These people's kind of that's the benefit of, I guess, of finance.
And that's what predominantly if you manage to sell the car for a decent price.
Yes. So again, depending on whether or not there's the guaranteed future value on the car, or you have an unsecured balloon payment, the risk then is with the client at that stage. But again, it depends on the variety of the vehicle, the derivative of the car, etc. And again, it depends on the customer's financial circumstances.
Yeah, because we've been round and round in circles, haven't we, down about a Porsche GT4 for me, which one day
he's been going on about this for so long.
Well, the new one isn't going to be announced, I don't think, for a little while, so I'm now getting very itchy feet about just getting the current GT4.
458.
458 is a little bit more expensive. Which actually, because the car has held its value very well, the financial agreements that you've managed to even just give me examples of have been very good.
Yes. Again, you're obviously an excellent client and an excellent
thank you.
With an excellent credit profile.
Car finance with you, Darren, calling me an excellent client. Thank you very much.
No, but again, it really comes down to the client's credit profile, and the lenders are under a lot of pressure to ensure that the client has the required affordability for the car, and that they're not in any way overextending themselves on a monthly basis, depending on their other outgoings, etc. Yeah. So the credit underwriting for these sorts of facilities is very strict, as you'd expect, and it's
Okay, so third and final way of doing finance, what would that be?
So we then have the PCP, or personal contract purchase, as it's known. Again, a lot of the mainstream manufacturers, Mercedes, Audi, BMW, for example, the PCP deals that they offer tend to be the main form of finance that they attempt to broker and introduce. Okay. The client ultimately has some better protection under the Consumer Credit Act in terms of the legality of the facility, and they also have very regulated ways to exit the facility in terms of final exit fees or breaking the facility that they've signed up to. Again, one of the key differences between the likes of lease purchase with balloon and PCP is that generally on PCP the final balloon payment is guaranteed in advance when you buy the car. So if you buy yourself a BMW 3 Series for £35,000 and the dealership gives you a balloon of £18,000 after, say, 36 months, regardless of the price of that car in the market, they are obliged legally to give you at least £18,000 for the vehicle when you come to trade it in.
Right.
That tends to be subject to mileage conditions and condition.
Do the other two forms of finance, do they have mileage conditions as well?
Again, it depends on the specific financial lender that we're dealing with. Some do and some don't. One or two of the key lenders out there don't have any additional mileage charges, but again, they tend not to have the guaranteed future value placed on the car. If the client thinks they will do 6,000 miles per year at the start of the facility, but they end up doing 10,000 over the course of the period, when they come to sell the vehicle, the car will be worth less in the used car market. Yeah. Whereas with other lenders, again, they tend to charge a maybe 9p per mile excess charge. So if you go over and above your stated annual mileage at the beginning of the facility, they'll give you a bill at the end based on the mileage you've gone over by. And that can be quite onerous with some of the manufacturers, certainly.
Right. And that's because basically the value of the car goes down.
Correct, yes. And it's, again, they can only achieve a certain amount for the car at that period. So they argue that they're financially worse off because of the mileage or the wear and tear or the general condition of the car when they come to exit.
Okay. So that, sorry, Tim, you...
yeah, just nudging that. So as an example on that, so for somebody as Mr. Williams over here, if, the 2 years away, the new 911 GT4, so, or 18 months away, whenever the new Cayman GT4 comes out. So right now, you want to buy a used Cayman GT4. You say you get that over a 3-year deal on a PCP, like on the last thing we've been talking about. That's got a guaranteed value at the end of this. So you buy this thing for 80 grand, it's got a guaranteed value of, say, based on the current market, they're going to look at it and say it might be 60 grand.
Yeah, but that's where the catch is. So if they're going to give you the guaranteed future value, even though we know the car may be £60,000 in the market in 2 to 3 years time, they won't give you a £60,000 balloon on the car. They'll set the balloon relatively low and extremely conservatively,
because really they know the new one's coming as well.
Not so much that they know there's a new one coming, but certainly they will only enter into the facility whereby it will benefit them when they come to take the keys of the car back, if they have to take the car.
Yeah, they've got to make money at the end of the day, haven't they? They're not stupid.
Yeah.
But with going with a couple of the other options, say through yourself, you're a little bit more in control of what you're going to be doing.
Wouldn't necessarily more in control of what we're doing, but again, it has to be the right deal for the client on the right vehicle. And again, depending on the client's annual earnings, depending on their overall credit profile, depending on their home ownership status. All of those aspects are factored in by the underwriters on any facility, and again, we have to ensure that the clients are signing up to an appropriate financial product for their requirements and needs.
Got it.
Again, in terms of the looking into the future, especially in relation to the residual value on the vehicle, again, there is an industry standard there called CAP, which all the underwriters refer to. Again, they have a little bit of margin either side of CAP as to setting a balloon on a vehicle, but generally they're all within a defined margin, and again, they can extrapolate forward to understand what the price of the car may be given a future date and time.
Got it. Because there must be a few people listening / watching this that is kind of thinking, I could probably afford a £100,000 car, but it does very much factor into, how much you are bringing in terms of they're not just going to lend you, £90,000 if you're bringing in 15 grand a year as a salary.
Yes.
So with that in mind, is there any kind of formula that you can kind of work to if you say you earn 30 grand a year? Do you think you could own a car that is worth X amount? Or, I think it's, especially for myself, maybe Tim, yourself as well, Patrick behind the camera as well, might be thinking the same thing. is there any kind of way of judging how much you could really afford?
Very good question. Again, it's on a very specific individual basis. So,
I mean, can we give you an example? Say someone's earning 30 grand a year. Comfortably, they have a 2-year contract at work or a permanent contract at work. They're earning 30 grand a year. So effectively, they can, comfortably afford a nice little runaround, but they want something a little bit more sporty, a little bit more exciting.
Yes, again, I have clients across the entire spectrum of earnings and different stages of their life in terms of their car buying histories, etc. I mentioned to Patrick on the way over here, I actually had a client a little while ago who had declared annual earnings of, let's say, sub £50,000, but yet he had the financial means to purchase a 918 Spider at 1.3 million. Yeah.
So, without going into too much detail, how does that happen? So if you show earnings of 30 grand a year,
yes,
but you're buying over £1 million car.
Yes, it then comes down to the overall assets and liabilities of the individual. How much is their property worth? Does it have a mortgage, right, or financially encumbered or not? Again, and they look at the totality of risk with the individual. So it's not to say, I have clients who may have relatively smaller incomes, but they can be driving hypercars. Then we have the opposite end of the spectrum where, an individual may be earning between 30 to 50,000 pounds, let's say, and they could be driving an 80 to 90,000 pound Porsche. Again, it comes down to the overall credit profile, how clean their history is, have they ever missed any payments on their...
Because that's a big thing, isn't it, for credit history? If you miss a payment, that's going to hit you bad.
Yes, absolutely, it does. And again, it affects your overall credit score. It affects the way the underwriters look at you and assess you in terms of your totality of risk. And then ultimately will determine whether they will extend a financial agreement for you on a vehicle or not.
Yeah, I think a lot of people don't quite get it in terms of what a responsibility doing finance on a car is. It's people sort of go, oh yeah, I'll just finance a car. You've got to be able to make those payments. I see young people doing it all the time. They get, even though it's only a 20-25 grand car, you're getting that. If you miss a single payment, that's going to mess you up. It's going to mess you up trying to get a mortgage. You've got to be thinking a long way in advance with these sort of things. Any financial commitment has got to be really seriously thought through.
Yes, very much so. Very much so. And it is legally, it's a legal obligation you're signing up to. Again, your home ownership status comes into play. Some lenders will require a minimum 20% deposit if you're not a homeowner. Again, it fluctuates from lender to lender.
Okay.
But as a rule of thumb, we generally use 20% there. So yeah, it's a financial agreement and it's legally obliging. You must oblige by all terms and conditions within it. And again, there's a simple way to look at it. Ultimately, regardless of the form of financial product you take out on a vehicle, if you don't make your payments on the vehicle or you start to miss several payments, just as the same way as a mortgage, for example, that then has knock-on implications. And regardless if it's a lease purchase deal, a hire purchase deal, or a personal contract plan, you will then run into issues.
Yeah. So please don't be watching this thinking, oh my God, I can afford a 100 grand Ferrari. This is amazing. I want 15 grand a year.
Yes.
It's just not going to happen because you'll end up getting into a place where you can't make the monthly repayments and then you're in big trouble.
Yes. But again, the responsible lending would dictate that ultimately the lenders would never go into the facility in the first place. And we as introducers and brokers know exactly who ultimately can and cannot go for these packages.
So Darren, you are not a financial lending company. You are the guy that is basically in between the client,
yes,
i.e. somebody trying to buy a nice car,
yes,
and the financial company's going, do we want to lend that guy 80 grand?
Correct.
You say, yes, you do. Can you afford it? Yes, you can. Brilliant. Put them together. Job's a good one.
Yes, so I'm an independent introducer broker here in the UK, and yeah, you need to be a UK resident, earn your money, and have a footprint here in the United Kingdom, ultimately. And I then, yes, I act and introduce for several of the top lenders, and we can get
mainly to YouTubers.
Yep, some of the high profile guys I work with, both across YouTube, the TV world, the sports world, entertainment world.
But again, going back to what we were saying, you don't need to be earning 100 grand a year to be able to finance a car, do you?
No, and again, it's about having a sensible deal on a sensible car at a sensible monthly price.
And you're the guy to give that advice. You'll say you can't afford it. Yes, you can afford it. Come back to me when you're earning a little bit more money.
Yeah, yes, it's about affordability, isn't it?
I
mean, and your outgoings and things. Because somebody might be earning 30 grand a year, but they still live with their parents, so they've got no rent.
Yeah.
So which one? They've got £1,000 going spare compared to most people.
Yes.
Yeah. Or people who work and live in London. You may be earning 50 grand, but if you're still living with your folks, or you've got like a really cheap room share type thing, then you can probably afford something more.
Yeah.
It's just about what each person can afford, isn't it?
It's very, very specific to each and every credit. Every person's circumstances are different, but again, it's about understanding the totality of risk for each individual client and understanding their ownership objectives at the start and trying to match the best financial product to them, which is again going to be accepted first time round by the underwriters.
Yeah. And with that in mind, if you are looking to finance a car, this is your man. I'm pointing to him now if you're listening to this audio only. Darren is your man. It was so easy dealing with you with my Volkswagen. You spoke to the dealership, you sorted it all out, and I just had to sign a couple of bits of paper, and I gave my deposit to Volkswagen. That was all good, and now I just pay a monthly payment to the guys that you put me in touch with.
Yes.
It was so easy. So please, if you are listening / watching this, don't think that it's a scary, car finance is a scary thing. It's not. Have a chat with Darren. He'll talk you through it. He'll talk you through the best way of being able to maybe purchase your dream car that you thought you'd never be able to own. Because even my little Golf is only 23 grand. I wouldn't have been able to buy that outright. No way. And I love it. I think it's a great car. So thanks to you, and thanks to putting me in touch with the right finance people and coming up with the right deal with the right finance package, I've been able to have that car. So if you want to get in touch with Darren, and you've probably been watching / listening this going, oh my God, this is incredible. It'd be amazing just to have a chat with you and to understand maybe what I could afford. What's the best way to get in touch with you?
So several ways. Instagram, I'm dealing with a lot of clients via Instagram directly. My Instagram handle is simply at DG18SON, so D Gibson, only as you would see it maybe on a number plate of a car, or alternatively via my website. There's a contact form there, and the website again is simply D Gibson, so it's www.dg18son.com.
DG18SON. Oh yeah, that makes sense.
Like a number plate, which I believe is probably on one of your cars.
It might be.
Car?
Yeah, if you see it, if you see a very nice car driving around with that number plate, it might be Darren. Darren, thank you so much for coming and gracing Tim and I with the presence of yourself and telling us a bit more about car finance.
Thank you.
And unfortunately now I feel like we might need to go to the pub and chat about what cars we can afford.
Yeah, with nothing down, can you get me in a McLaren 720S?
No.
Okay.
You'd have to win one with BOTB, Tim. And with that in mind, thank you so much again to BOTB for sponsoring this podcast. If you don't know anything about BOTB, BOTB is a dream car company which you can win a car every single week.
And you really can.
You really can. It is a real thing. Everyone's like, oh my God, it's too good to be true. As you know, Darren, and as you know, Tim, and I definitely know.
I play regularly myself.
There you go. Yeah, it'd be really awkward if I come and surprise you on a Tuesday now. Tim and I obviously do a bit of work for BOTB, and I'm very much the lucky guy that gets to go out and surprise these people with their dream cars, and they run a lifestyle competition as well, so go and have a look. Loads of cars online. There's a winner every single week for both competitions. BOTB.com. Darren, thank you so much again.
Thank you.
Tim, do we know where we're going to be going next? Probably not.
We might be going somewhere with lots of supercars.
Really?
Maybe.
Oh, well, I haven't been told about this yet. Please do make sure you subscribe. Of course you can come down. Please do make sure you subscribe to the In the Headlights channel, and we'll be seeing you very soon. Thanks a lot. Cheers.
Bye-bye.